You know, the last time that we saw stats like this, 2000, the NASDAQ was in stratospheric space. It eventually lost 80% and took 14 years to recover. So if you're in the camp that is saying it's different this time, and you're going all in on stocks that are running away like this, you better be right. Because if that was to repeat itself, you're looking at 2034 before you recover. Welcome to the chase. You know, we're all running this race. We're all trying to claim victory in it. In my job, I get to sit down with wealthy people all week long. I hear about their wins, I hear about their losses, and quite frankly, like a bartender, I hear about their heartache. And I don't want you to run that type of race, or at least I want you to succeed at the race that you're running, and I want you to succeed at something that matters. Think about it like this. All the while you're chasing after something that's good, God's chasing you with something great. Well, hello, this is Chris McAlpin, and welcome to The Chase. You know, I hope that wherever you're going right now, that you're going with the mindset that you're going with great excellence, that you're going to work hard, that you're going to do something cool, that you're going to make a difference, doing something that matters, doing something that's valuable today. And I want you to do this wherever you are in life, whether you're the CEO of the company, whether you're a doctor, whether you're a math teacher, you're a carpenter, whether you're a pastor, it doesn't matter. You know, God's placed you where you are in your life to live with excellence. And while you're chasing success, while you're chasing security, while you're chasing status, always remember that God is chasing you with something far greater. And our job in the chase, in this podcast, is to look at the financial world, look at the markets, look at the economy with a biblical lens. You know, sometimes we're going to dive in deep into the Bible, and sometimes we're going to dive in deep into the financial space. And really, that's what we're going to do today. Because so often, let's be honest about this statement I'm about to make. So often, we use our money to define who we are. We use our money to define the successes, the wins, the losses that we're marking up in life. And we look at our investment returns and we compare them to our friends. We compare them to the nightly news. We compare them to the people that we hear or read on all types of different social media feeds. And I want to, we're going to unpack an idea regarding bubbles in the stock markets in just a minute. But it's such a painful, I think, reality that we're seeing going on this year, where people are just chasing these returns, and we're wanting so much out of them. And that's what we want to see if we can't unpack and kind of rewind and maybe unwind and get away from that type of attitude. And so as we talk about bubbles, as we talk about the stock market, saying that the year 2020 has been crazy just kind of feels like a childish understatement. And the last time, and I'm going to just stick with the stock market for now, if I have your permission to do that. The last time that I saw a stock market like this that was really this crazy was in the years 2000, 2001. And we saw a lot of things in those 2 years that we had never seen before. Just like we've never seen a global pandemic, we had never seen commercial airlines fly into buildings. You know, most of us at that point had not really lived through or worked through a real investment bubble. And we're about to go through 2 in that decade. Now we're seeing new technologies that are pushing trading with social media characteristics, when we have nudges and notifications that are bumping people to invest in strategies that they don't understand, a la Robinhood. And just like 2000, 2001, our concern is that it's not going to end well. That our concern is quite frankly going to end disastrously for a lot of investors. And the reason we're talking about this today is that we don't want it to end disastrously for you, okay? And so before we dive into bubbles, let me say a couple of things. At our firm, within our investment team, we are adamant in our opinion, okay, that the facts, that the data points to U.S. stocks, tech stocks in particular, being in a bubble. And we're going to talk about some of this data. But at the same time, we recognize we do not have a crystal ball. We do not know if this bubble is going to pop, when this bubble is going to pop, how this bubble is going to pop, or is it just going to fizzle out like an old balloon? And so as we dive into this, we're going to look at the data, and we're going to go to some nerd space a little bit, but I want you to pay attention, stay with me on this topic, okay? Because it's important. It's important to your money. It's important to your investment strategies. But keep in mind that we recognize that we don't know the future. You know, I tell people when I look at a chart, the problem with looking at charts is I can see all the data on the left. I don't know what happens on the right. It means I don't know what's going to happen next. All right, none of us do. And so anybody that's kind of touting or running their mouth otherwise, quite frankly, run the other direction because they don't know either. None of us know the future. And that's just the way it is. But we're going to look at the facts. We're going to look at the history of those facts and do the best we can to make decisions for our investment future. Okay? So I've made the statement that bubbles are funny things. They're full of excitement. They're full of people making a ton of money. And that is until they burst. And the two that I've worked through in my career and all the ones that I've read about in history all have the same personality. And that is that it's different this time. And they all have the personality where amateur investors are just diving in. And I'm not picking on anybody that's not a professional investor. Don't hear it that way. But investors just get sucked in. A lot of professionals do too. They get sucked in to this attitude that it's a runaway freight train going straight up and I gotta participate. And then you have public personalities, and this is where you start seeing the top, by the way. You have public personalities saying and writing stupid things like, say it with me, stocks only go up. Only losers take profits. That's a quote, by the way. I totally and vehemently disagree with that statement. Quite frankly, it is a foolish idea, because eventually the bubble bursts and the markets fall painfully. And these ideas end up as a fool's errand where people were betting on luck and not investing in a high quality future. So we couple that. That's been true on all the bubbles that I've studied and lived through. But now we have this last decade where technology has gamified a lot of what we do. Gamification of investing is a great idea. It's a great way to learn it, okay? Especially for those generations that is how they learn. And the problem is, just like video games that are violent or war games, and the player is kind of decoupled from the results of shooting another player, that in real life, when you shoot somebody, in real life in war, that it ends bloody and violently. When you gamify investing, when you make a mistake, you lose money. And so we've got to have maturity and wisdom with our investing. And unfortunately, it seems like, at least in my opinion, that maturity and wisdom's kind of in short supply these days. But I think that's a topic for another day. Maybe I should move on. But as we think through this, we want to add maturity and wisdom. I tell my girls all the time that maturity and wisdom never goes out of style. It's always cool. That is always something that's valuable. And so the hard part of challenging a bubble, it's like you're the kid in the old fable, the emperor has no clothes, and you're the kid screaming that the stocks are naked while all the adults are just playing along. And the adults are playing along because their friends are playing along, and the adults are playing along because they're afraid of missing out. They're afraid of being different. They're afraid of bucking the trend. All the while, the emperor really was naked. He had been tricked by two tricksters that he had these beautiful garments on. And so again, we want to pull back the veil of that because we want you to be successful. We don't want you to be fooled or sucked into a peaking market. In Ecclesiastes, we see this. Solomon writes in chapter 11, divide your portion to 7 or even to 8, for you do not know what misfortune may occur on earth. If the clouds are full, they pour out rain. If a tree falls to the south or towards the north, that's where the tree falls. He who watches the wind will not sow, and he who looks at the clouds will not reap. And just as you do not know the path of the wind or how bones are formed in the womb of a pregnant woman, so you do not know the activity of God who makes all things. Now, this is ancient language. It was translated into English today as 3,000-year-old language, but he's talking about in your investments to manage risk, that you should invest, that investing the resources God has given us is a good idea. You should invest, but you must manage risk. Okay? So historically, here's some of the bubbles we see in history. The Dutch tulip mania of the 1630s. Yes, they were selling flowers for thousands of dollars that eventually equaled 10 times workmen's wages for one flower. Insanity. The South Sea bubble, a legislated monopoly that never made a profit. And they even outlawed bubbles by the English Parliament, and it was still a bubble. The Japanese asset price bubble, the dot-com bubble, yes, IPOs of companies that had never turned a profit, if I remember correctly, not even revenue, and they went up by many multiples. The housing bubble, where people were buying houses on interest-only ARMs. You see, when you look back in history, you see the foolishness of these ideas. Every bubble ends, every bubble pops or deflates. And so when we look at the one that we're looking at today, there's only one of two choices. A, it ends and it pops. Or B, history is different this time. It really is different this time. And in every one of these, there's a strong argument as to why it is different this time. So let's unpack what is a stock bubble and why do we believe that we're in one. First off, a definition of a stock bubble is an asset that has that the price of the asset has far exceeded the value, the intrinsic value or the true value. Jeremy Grantham defines an asset bubble as when the price gets 2 standard deviations above the fair value. And so we look at one valuation of the market, the U.S. market as a whole. This is called the Buffett Indicator, and it's the market cap to GDP. This is as of October 8th of 2020. It's 2 standard deviations above its historical trend, right in line with where it was in the year 2000. We can look at the CAPE, the cyclically adjusted price to earnings ratio, or the PE10 is also about 2 standard deviations above its historical mean. Each of these and all other stats, excuse me, I shouldn't say all other stats because anyone can proof text. Each of these and other stats that we could point to are telling us that U.S. stocks are about 45 or at about a 45% premium. So let me oversimplify here. If we want to buy low and sell high, which is historically how you make money in stocks, and there's a lot of other trader mechanisms you can do, but let's just stick with buying low and selling high. And you're already paying a 45% premium. How much time is it going to take? And what kind of risk are you taking in that time to sell that asset or sell that stock at a higher price if you're already paying a 45% premium, which is what this data is telling us that the stock market as a whole, the US stock market as a whole, is priced at. We can look at the famed stocks, Facebook, Apple, Amazon, Alphabet, and Microsoft. All of them are above a 30 PE. Amazon is above a 100 PE. We can use Tesla as a crazy example. It's hanging out at about 1100 PE. Don't get me wrong, these companies build great products. They're innovative, they're cool, they're fun to watch. I use some of the products that they use, all right? But their stock price, a strong argument can be made, has far outpunted its coverage, and that stock price is way above its intrinsic value. You know, the last time that we saw stats like this, 2000, the NASDAQ was in stratospheric space. It eventually lost 80% and took 14 years to recover. So if you're in the camp that is saying it's different this time, and you're going all in on stocks that are running away like this, you better be right. Because if that was to repeat itself, you're looking at 2034 before you recover. So when does the bubble burst? I don't know. If I did know, I'd make you and me both very rich. I don't know the answer to that. But you think about it like this. We have a global pandemic. We have a bad recession. Over 2 million people unemployed. A contentious presidential election. You know, any or none of these could burst this bubble. And you know, when you're, the challenge is when you're away from the bubble, you can see all the details going on. But when you're in the middle of it, it's all up close and personal. You can't exactly see what's the pinprick that's going to pop it. You know, there's a lot of speculation going on that, you know, the Fed is trying to deflate it now. Will they be successful? Will they not? Is our market that manipulated that they can manage that? I don't know. We don't know the answer to the future, because that's exactly what you're asking to do. You're trying to predict the future. But this is what I know. If we are in a bubble, and we believe we are, what should you as an investor do? First, suspend the attitude that stocks only go up or that bonds are for losers. I've heard that. And you know what? Sayings like that were developed by stockbrokers to sell stocks. I know, because I was one. And it sucks people into bad investment ideas. So no, stocks don't always go up, and no, bonds are not for losers. Have a well-built investment portfolio. 2, follow the data, okay? Warren Buffett says the first rule of investing is don't lose money. The second rule is don't forget rule number 1, okay? Here's King Solomon in Ecclesiastes saying, watch data, look at the facts and see the facts as they really are, and respond accordingly. Number 3, develop your own goals. Don't use the stock market as your scoreboard and as your determination of success. Develop your goals, set plans to reach those goals, have an investment strategy that fits those plans, and invest in that strategy and be disciplined and follow that plan. And number 4, manage risk and be patient. You know, so much of our society has taught us to be impatient. We're a microwave society, far worse than we have been in 2 decades ago. And we want it now. That's not how wealth is grown. Be patient. God has blessed you with tons of resources and opportunities. Be patient. Be patient. And so I love the close of that section of verses in Ecclesiastes, and I want to include them here, okay? So verse 7 says that light is pleasant and it's good for the eyes to see the sun. It's saying that life is a good gift from God. Enjoy it. Live free Run hard, but know this, as we're saying so often in these podcasts, know that God is chasing you with greatness. He is chasing you with success and security, but He's chasing you with a status that you're one of His own. I hope you'll stop long enough and let Him catch you. Take care.
74% of Christians have no idea that faith-based investing is even an option. Faith-based investing is a way to emphatically say no to harming people or the world that God has created. It's also a dedication to not compromise the mandate that God has given us to multiply and be prosperous. You know, maybe it's something you've been talking about, your spouse, or maybe God has nudged you while listening to this, or you might just want to hear a little bit more about faith-based investing. If you do, and you'd like to speak to one of our advisors, go ahead and go to soundfsg.com/thechase.